All right, good morning. It's the Saturday morning. We're still supposed to do this video on Friday evening, which is yesterday evening. We do a end of day recap for Friday. However, we got something to do we're not able to do, so I'm doing right now. So basically, Friday it's beautiful in bright action. The reason why I say it's beautiful because it makes the move that you can enter and exit the trade. It's not really toppy at all. And we learned the lesson that the day before that, which is Thursday, the market is choppy. I mean, the whole week is choppy, right? It's just 4 days of trading week. It's very tricky. It's July 4. So we don't have I think we do not have a Monday, so we only trade 4 days, right? Let's look at the 5-minute time frame right here. Yeah, we don't trade on Monday. Monday is the July 4th, so we're off. We only trade Tuesday, and we trade Wednesday, Thursday, and Friday. And we can see that, we know that it's gonna going down. Why? Because we look at the high time frame, we see that it taken the buy side liquidity. Whenever it hit the buy side liquidity, it grab the liquidity up there and it's going down. That's how the algorithm is performing, right? We look here on the 4-hour time frame. We can see the buy side liquidity were taken, and here's the double top, formation right there. So we see that it could start going down, and right there we see that is a bearish order block, and then the fair value gap came down on Thursday. So you remember in the end of day review on Thursday, we anticipate, or we want to, the market go up here. We anticipate this is a bearish breaker, and it's gonna retest this guy. It's just how the algorithm perform, right? It's change in the state of delivery. Now it's gonna go down, and how we do that, it leads you a signature, so you can see it and observe that right here is a bearish breaker. It have a fair value gap, a huge displacement, but the tricky part that this displacement did not happen in the normal trading hours pre-market, so it's very hard for you to jump in and short them. I think we did point it out in the review on Thursday also, and I think we come up with a plan that next time if we're suspicious or we anticipate it's gonna come down a little, we're gonna play the trade at the end of the day on Wednesday, and then we're gonna exit the trade when it's reached our target down here at the at high time frame, and then we go from there. That's one of the lessons. But however, we anticipate that if we make a move on on either on Friday or either on Thursday and Friday, and on Thursday we cannot enter the trades because it didn't give a clear setup. But on Friday it gave a clear setup, and the first trading hour it didn't give a good setup, but later on it gave a good setup, and we couldn't take the trade because at that time we're not available to be in front of the computer and check a trade on the first on the later on of the day, because we just only do the first hour because that's our routine. But we don't have I couldn't make it on time to play this trade, but it planned out beautifully as we anticipate. You see, that's how how we draw right here on a high time frame at 4 hours. We anticipate it go here, you're gonna retest the bearish, order block, and it come down, and exactly what we are anticipate. However, you see we put the target a little bit, sell side really right here, want to take out sell, but it did not come all the way out there, but at least it give a good chunk of movement right there. So yeah, so our target can be adjusted to be a new week opening up level, or this order block, right? So with that will be our target right there. But anyway, it's in terms of direction bias, we are correct. I mean, we are anticipate the move, exactly move on Saturday. So take a look now. Let's do some annotation right here on the 5-minute time frame. We see how it moves. So in the first hour, right, we see something right here. We see it have to break through this range, and it did break through. It go through right here when it would anticipate it will be short, and no, it's not there yet, so it go long and went up here, so you can see how it moved. So when we play the trade right here, then we have to either entry right here or here. So we either at 10:20 or 10:30 right here. So right here 10:20. So 10:20. What the high of this? 44264, and then this high of this 44264. So it's an equal high right there. It gives you a very very signature that you need to go in and short them right there. So equal high. So pay attention to equal high close, because that's where the algo gonna give you the signal what next draw on liquidity, or what next move we're gonna make right there. Annotation right here. So we have 13:20. So it's 12:20. I mean 1 p.m. 20. This is a 5-minute time frame, so 30. So we take note right here. So around 12:30, it could be a good time to enter the short area, because it hit into our bearish breaker, which is so-called resistance level, right? Then we enter the trade, or we can enter right here also, right? Because we see that if order block right here is an order block, right? It move away from order block and retest there, so you can enter it right here 40. It gives you some signature right there. You can do 40. So it's a time of interest for us right there. 20, 13, 20, 30, and 40. So yeah, and the target for is huge right here. You can put a target at 9:40. I mean, open 9:30 is our target right here. Yep. So let's annotation this beautiful trade right here. Right, is the we need to put a little bit annotation right here. Right. So right here is a what? It's a bearish breaker for our time frame. This will be in the bottom. So we know that this is the level I hit right there, 4475. So that will be our stop loss right there. We entry optimal right there, stop loss right there. That's beautiful trade for us right there. And one thing I want to point out real quick, you remember on Thursday, we see that it violated the DR model. It swing, back and forth, you see? So the DR model states that after 10:30, you will know the high of the day and the low of the day. So basically after 10:30, we know this is going to be low of the day, right? Because it go down, it confirmation, it validate the DR model. However, after that, it come back and it check out the DR high. That means it validate. And if you pay attention that when you have the day where the DR model violate, the next day is gonna make a very clean move and easy for you to trade. So just pay attention to that. And it exactly happened this week, right? Thursday, the DR model will violate. The next day, Friday, give you a very clean move right here. If you go long, you have a clean move. You can take good profit. And then if you go short, you have a very clean move, not really choppy at all. You see, it's just a V shape right there for you. Beautiful right there. Beautiful and clean move. You don't see that. You can see that happen one in a week. So that's our job right now. We'll just to find out when that's gonna happen. So we take advantage of that. So that's our model is built around that. We only take one trade a week, and based on the expansion of the week, we will make a very clean move for us. So if we see this is a long setup, how do we communicate it? Because we see that in London, how do we decode it? How do we identify this? So next time in the future, we anticipate it right, and we can engage. So based on ITC concept that the London Q-zone, which is from 2 a.m. to 5 a.m. in the morning. So when it check, normally if it only check the sell side liquidity out of London, then we know it's gonna go long in this case. However, it also check out the buy sell liquidity. So it gives you some idea right there. And I remember on the first hour of trading, we couldn't make of this. We couldn't make sense of this. We were very confusing. So, but in this case, you see it make a huge move right here, right? It take out both sell side liquidity, take buy side liquidity first and sell side liquidity, and then in the third, I would say the first 2 hours, right? And it's open at 9:30. First hour of the trading is still in this huge is still on this move, right? It's still in the grand right there. So how do we anticipate this is okay? We can see it is the long setup right here. It's order block, and then a huge move up, create a failure gap order block and retest. So you can go long right here. 10:30. This order block rate at 9:25 and huge move. So that is our signature right there, our setup that we are looking for. It's 9:25. Okay, let's do 9:25. Yeah, the order block at 9:25, and you see the huge move at 9:30 when it open. Drop it down right here, it's easy to see. Okay, 9:30, you see the huge displacement upside, and then a failure gap right here. So that's a good order block for you. And whenever if we test that, it gives you some idea. And right here you see the move that I did not take out the high of this one, which is a buy side liquidity. That means it's gonna go up to take it. It's gonna retest. So it is the 10:30 perfect time of entry for when we enter long also. So but we didn't see this coming in the first hour of trading. We didn't see the setup. I think we may caught up with the 1 minute time frame. So let's see how it happened in the 1 minute time frame. Yeah, on 1 minute time somehow we able to say that here is a raising wedge, so we thought it's gonna be a short. You see right here, bearish breaker, further up, retest twice, so we thought it's gonna be breakdown. However, if we look right here, we can see this order block right here, and it retests this order in order to go up, and the entry is about 10:34 for us. Okay, so let's go back to 5 minute time frame right here. All right, so let's put it right here. So when will be our exit? We can exit right here, or we can exit when it reach this level. Bearish breaker close. Yeah, we can regulate because the midpoint of this the bearish breaker, so we can do the midpoint right here as our target. So we 12.55, which is good. That upon a time entry also. So 12.55. So it's a long setup right here. Let's lock this trade. Like we are back testing right now. Back testing our strategy. Alright, so what you call that then? Well, I will call this is a order block of fair value up, right? Fair value up, displacement, and retest is a long setup. Entry time is 10:30. It's one of our interest time that we are looking for. Yep. And order block is Gibson order block is S925. And the target will be this area, in this case we choose the midpoint of this bearish breaker. And our exit time, right? Exit time will be 12:55. That's around there, right? And we can see that it's a logic right here, right? So buy side liquidity not rated if it really come down, it will read it, the buy side liquidity. Remember, that's a good side for you to go long right there. A good confluent signal to go long. If it rated this, then it will go down. But if not rated it, if this buy side liquidity, I think ICC call it intermediate something level. So if this level not taken out, then this it will be a fake move down, so you can go long. So let's say it will be a what? A fake breakdown. Okay. Oh yeah, fake breakdown. And that will be bullet, right? That you know, right there. Let's see. So we entry at 10:30, and we exit right there. Our target right there. That's a beautiful trade, my friend. Another thing you can see right here at this 9 o'clock, the order block, very nice. This one not well, not, you know, it's kind of the same level, right? It not really break down at all. Okay, so let's lock this trade. Yeah, let me open the file real quick. Yeah, that's our long trade, and now let's document our short setup. We auto block, right? That's auto block, fair value gap, retest. Fair value gap, long setup. Okay, and this one we have to say that the buy side liquidity not rated. Which is a create a fake breakdown, and that will be bullet. We have to train our brain to see the pattern, right? Okay, so for this we can either entry here, right? Here our entry, or 10:30. That will be perfect for us right there, right? What is 10:20, 12:40? Yeah. Okay, let's lock this trade out. So the same idea right here. Hold on. Yeah, it did take out liquidity. Yeah, if we see that at 4-hour time frame, so it did take out the buy side liquidity on the 9 o'clock for 4-hour time time frame at the night, the candle at night, so it's a good signal for you that it's gonna go short after the buy side really was taken. That means after 12:30, yes, it goes up right there. At 12, it check out liquidity. You see, that's a signal right there. So let's lock this trade, my friend, right here. So what you call this one? It's the same, right? Same set of order block, fair value gap. A retest. Retest, and this is a long setup. And the condition for this is the buy side liquidity were rated. We don't see it clear on the 5-minute time frame, but if you see on the 4-minute time frame, you will see that. So basically, the 4 at 09 versus 4 4-hour time frame at 13. You see that it takes out that liquidity right there. So that gives us a confluence of a point of interest or confluence right there. And the entry time for us is around 13:40, so it's about 1 hour 40 in the PM. And our target is very simple in this case. It just open, that's it, at 09:30, that's it. It will reach, I think, around 55 something, yeah. Exit time is, I think, is 55, right there. Yes, beautiful trade. Yep. Man, it's very clean move, 2 clean move right there. Beautiful, we will stay in those trades. Alright, so that's our recap. And remember, next week is the CBI week. So I think so far, yeah. So we can see this is the key level. If you look at the 4-hour time frame, you can see this key level. You see how it move around this level. You see this is a bullish breaker, right? We want to stay above here. And there's a bearish breaker if it's short, if we go short, then we below this one. Okay, so I think that's good for now, and that's our end of day review for Friday. All right, talk to you later. Bye for now.